Okay. Yeah. Let me share the whiteboard screen here so that we can be writing whatever that we'll be discussing. Okay. Okay. So ladies and gentlemen, are you able to see the whiteboard screen that I have shared? If you're able to see the whiteboard screen that I've shared, please go and type number 111 again. Okay, type 222 because we've been typing one several times. Type 222 if you're able to see the whiteboard screen that I've shared. Okay, nice. Okay, good. Great. So let's start our class. So ladies and gentlemen, when we talk about crypto or blockchain-based business, it's something that has been popular, but the popularity of it has been a stingy to some of the people. I mean, to most of the people, because it has created the emotions to be part of the decision, and the fog of misunderstanding has been an advantage actually to the people who they don't wish anything for you rather than taking your money. Because the reason why we are having this class is to try to share and understand where the potential of the blockchain is. Like, why do we need blockchain? I always tell people like blockchain has been one of these tools that is a digital infrastructure that is providing the access to different opportunities that are borderless. Like there is an opportunity that I had to travel to have the access to it, but through blockchain, we are having the access to a million of opportunities, and it's borderless. Like I don't need to travel. Like I have access, like just like another person who is in other place. But we need to understand exactly what is this blockchain now. Speaking of blockchain, actually. So speaking of a blockchain, it's not that thing that people think is too complicated. Blockchain is a digital infrastructure that allows you to present or to implement your business idea, your innovative idea, or any creative service that you want it to run by using a smart contract. Like any business idea or innovative idea that you want it to run by using a computer language, which is automated. In other way, we call it smart contract, is what we call blockchain. Of course, we have different kind of blockchains. And basically for today, we'll be focusing on the blockchains that allows you to build something extra apart from the native project. So like Ethereum blockchain, Binance Smart Chain, Polygon, Solana. There are so many blockchains that allow you to build a certain innovative idea on top of it, and it will be running by using a computer language, which is in automated manner. We call it smart contract. And the way it is running, the data and everything, they are being stored in the blockchain. So saying like this means blockchain, it gives an opportunity to anybody to present their ideas. I need you to listen very carefully. Blockchain gives you the accessibility to present your ideas that they're going to be running by using a computer language, which is an automated manner that we call a smart contract. I have not said blockchain is a stamp of legitimacy. Are we together, ladies and gentlemen? I've just said it allows somebody, a group of people or institution, to present their innovative idea by using a computer language, which is in automated manner that we call a smart contract. The idea or the innovative idea to be valid or not to be valid, that's not an issue of blockchain, because what blockchain does is to read the codes that have been created by the computer programmer to represent the idea that somebody has came through with. So for example, I might have a business idea and I want it to be implemented in blockchain by using a computer language that we call a smart contract. I will not, like, I will go to the computer programmer and I will tell him, like, I want my business to be like this. I can, let's say, like, I can write a white paper and fill in whatever that I want to deliver, the solution, the economic part and everything. And I tell this guy to do me a computer programming that's going to translate whatever that I'm having as my idea so that it can be translated or it can be read on blockchain, because blockchain does not read this normal language. It has its language that it reads, but a computer programmer can code whatever that I think into a computer language that can be understood by blockchain, and it can be executed to run the ecosystem of my idea. But this is the thing. I have said that blockchain is not a stamp of legitimacy, because I can create a scamming idea and it can be built on blockchain. I can create an illusion idea and it can be built on blockchain. I can create a very good solution and a very good idea and it can be run on blockchain. So here now we need to understand, a project to be running on blockchain does not guarantee if the project is legitimate as good. Blockchain is just a tool. Good people use it, bad people use it. But basically, it was created for the very good intention of elevating humanity. But now, you know what happened. Blockchain came through directly to the community. People took advantage of it. It was too popular, like the hype was too high. And then the misunderstanding was so much. And then those people who have a bad intention, they took the advantage of fog of misunderstanding to capitalize their pockets by stealing your money. And we are still having the same problem until now, because as far as I know, we are having a 600 to 700 million people using crypto blockchain ecosystem. And out of these 600 to 700 million people, only 10 to 12% are the profitable investors in the crypto industry. So you can see how bad it is, because majority are still losing money. And the reason why they're losing money is because of the hype. Like, they have a blind faith and they turn belief into truth. But the fact is, your belief, that faith you have, does not define the truth, because sometimes you can have a faith about something because of your greedy, hope, and fear of missing out. It's not because you understand. Am I talking to someone, ladies and gentlemen? If the the meaning of blockchain is clear, please go to your box chat and type clear. If you have understood what is real blockchain means, just go to your box chat and type clear, so that we can move on to the next step of our explanation. Go to your box chat, please, and type it is clear. Okay, that is good. I can see you, Godfrey. Everybody, especially those, okay. I see Innocent, I see Judy, I see Mariam. That's good. So many people, they say blockchain is working by using 3 pillars. We know it's having a decentralization, transparency, and security. That's true. Those are the pillars of blockchain. Like any project that has been built on blockchain, it has those pillars. But the problem is, we don't know how exactly these pillars are being used. When we talk about decentralization, speaking of decentralization, we are talking about something that is not having a single point of decision. But remember one thing, there is no project which is decentralized since day one. Because look at this. How would you say a project is decentralized completely if I'm the one who has built the project, and I'm coming to you to pitch the project so that you can be part of it by buying its coin? And I'm showing you this project is like this. We have our own coin, and we're going to implement this and this and this to this year. Do you have any say? Like, would you go and say, oh, I need you to change this and this so I can buy this coin? Can you do that? The answer is no. Because at first, you need to be presented with a project. If you're going to love it, then you're going to buy the coin to be part of it. And then later on, if something new that was not presented at the point where you are buying the coin, or it was not written in the white paper at the first place, or they want to do any modification which was not there at the first place, then at that time, they will need an approval from the members. That's where now the decentralization starts to work. But in the beginning, you are just presented with the project which is having a roadmap already. There is no decentralization there, because they will never ask you a permission to implement the roadmap that they presented to you before you bought the coin. So decentralization is the stage. But in the beginning, you have to understand the implementation has to be done. And there is no way you can come and invest into something that's not even complete, because you need to see the project and then you can say, wow, this project is having a good idea, I have to invest in it. But you cannot invest like, okay, we need to create a decentralized system, it will be like this and like that, please contribute some money. Like, where do I mean, put the money? So we need to understand exactly like what is this, then you invest. Later on, if something new that has supposed to be modified in the project for the ecosystem, then they need an approval from the community. That's why now the decentralization works. That's the meaning of decentralization. We don't need to misunderstand things like, oh, the project that has been built in blockchain is decentralized, like nobody's going to decide. Like, no, 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 no. There are project developers there. There is a roadmap. So some of the things, they will be implemented without your approval because they were there. You were presented that they're going to be added. So they don't need your approval. So there is no decentralization. But as long as they're going to change something that was not written on the roadmap, or they modify something which was not presented there, they need your approval. So even the projects like, I even made a video, even the project like Bitcoin, it had some errors in the beginning and they made the changes without even asking for the community because it was in the infancy stage. So there was no decentralization at that point. So the project starts from infants, and it needs a credibility of the developers to build something good. Of course, you can have an access to go and check through the smart contract protocol that they use to run the idea, but still, there are some of the things that they need the credibility from the company, like to create something good that is going to be presented. Like, you need to see whatever that is presented on the white paper, it should be the same that is written on the codes. At that point, now you can be comfortable and waiting for the more improvement, which in fact, if something else is going to be added on the project that was not presented in the white paper, there they'll have to ask for the approval from the community members. That is the meaning of decentralization. Are we together, ladies and gentlemen? Have we understood about decentralization? If it is clear, go to your blockchain and type number 111 as point number 1, as the pillar of blockchain is clear. Go and type number 111. Okay, so let me see here. Okay, good. Number two is about transparency. Transparency. So when we talk about transparency, we are talking about the accessibility of the information about the given project without having the authorization from the executives. So for example, today, if you want to check about Inkryptus, you don't need to call Pierre, you don't need to send the message to the supporter and start asking, oh, I want to see the protocol, I want to see the balance, I want to see the transactions, but those are the things that you can access them without even asking to the executives authorization, because they are in the open source code. That's the reason why it's called transparency, because you have the access to check through the projects without the authorization from the executives. That's it. That's the best thing about the project built in blockchain. You know everything without even being authorized. If I want to see the transactions, I want to see the contracts, I want to see the protocol of the smart contract, how the token is being distributed, the project is being run, I can just check without having the authorization from the executives. That is what we call transparency. Are we together, ladies and gentlemen? Type number 222 if the transparency is clear. So we can go fast. Type number 222 if it is clear about the transparency. Okay. That's nice. Good. And actually, number three, it's all about security. When you talk about security, that's where now many people are losing a lot of money, because they think, okay, let me ask you something before I go and explain about this. Have you ever heard about this word security? Like, oh, this project is built on blockchain, is secured. If you ever heard about that, what's your take? Like, how do you understand about the term security? Is it like you cannot lose your funds, you can never be stolen, you can never get lost? Or what exactly does security mean when it comes to projects which are blockchain based? Can someone go and share with us here? Just go in the box and share what you know about security. Is it like you can't lose, you can't get lost? or it's like, what is it exactly that you understand? For anyone who understands, please share with us. When we talk about security in the project, if anybody knows, can you share, please? Just go on the box chat there and share with us. Okay, seems like nobody has a clue about it, but it's okay. So, okay, there is a message here. Data security, exactly. There is a message from Eliud here. Okay, Paul does it. Exactly. So the security that we are talking about when it comes to projects which are built on a blockchain, it's all about data security. Like whatever information that has been shared, recorded on blockchain, it can never be tampered. It's immutable. Like it's a timestamped, it can never be edited, like it's been saved, it's just like that. But having the information being recorded on blockchain and being immutable, it does not justify anything about the business profitability. And remember, when we talk about security of funds in blockchain, it's not something to do with architecture makeup only. Even yourself, you are responsible for that. So it's something which is, it's not something as single pointed. It's something that's having a diverse of responsibilities. So the data security is something that we mean security in a blockchain based project. That's what we mean. And that is why now, as far as we already understand, like security is all about data management. It's a high time now we understand, like in blockchain, there are so many projects that are built on, and not every project built on blockchain is good, because blockchain just read the codes. Whether they are bad or good, it's not its work to exempt, because it's not a stamp of legitimacy. So whatever projects that is built on blockchain, if you want to invest in it, it's your sole responsibility to try to analyze the project in 3 dimensions to understand how it works, what is the potential of it, the architectural makeup of it. Then after that, you are free to say this project is genuine, because this is just an example. Like when we see there are so many companies around. For example, in my country, Tanzania, we have different companies that are being registered. But not every company which is registered is good. Some of the companies are bad. So you cannot say, oh, this company is registered, that's why I invested. It's not possible to lose. No. Registration does not mean legitimacy, because sometimes the company can be legit in terms of laws, but in terms of integrity, it cannot be a guarantee that's a good company, because the registration there is the name. But what is done on the name of the company is something different. That's very important for you to cross-check with. Okay, there's a message here. Okay, Joseph, I think when I was starting the class, I said, if you have the question, reserve your question, because I have not even started to talk about investment. If you listen very carefully, this question that you have asked here, you will see the answer to it. So focus on what I'm teaching, and then later you start to ask the question. Just listen, okay? Just listen. Okay, so I was explaining, like, a project to be built or presented by using blockchain does not guarantee if the project is good, okay? It can be a scam, it can be a good business, can be illusional idea that it can never be executed. Those are possible things that can happen in blockchain, and they have been happening and they're still happening. That is why it's important for you to know how to analyze the good project and the bad project. So this is the thing. Before we know how to analyze the good and bad project, we have to agree. Like crypto is one of the facilities, the creation which is found in blockchain. And the word crypto is the slang which has been transferred from the word cryptography, a computer language. So when we talk about cryptography or crypto, we have so many of them. We have crypto assets, we have crypto tokens, we have cryptocurrencies and all that. And basically, many people think like crypto is all about money. Of course, most of the crypto are made with that intention, but basically the adoption of the world has changed it. Majority of the crypto, they are termed as an asset. That's why you see even the institutions, they are regulating crypto as assets, not as money. You can see it's happening in Dubai. Vasa is the one that's regulating and giving the license to crypto assets. You can go to United States. You can see Security and Exchange Commission plus commissions. I mean, Commodity and Futures Trading Commission, CFTC, is the one that's guiding on the creation of the policies and rules on to guide on the use or proper use of crypto assets. So most of the crypto are assets. The reason why most of the cryptos are assets, because first of all, they are very, I mean, they have price fluctuation. They are volatile in nature. Number two, they're innovative based and they're speculative in nature. They have equity. So basically, with those kind of characters, it's really hard for you to term them as money. Of course, there are some of the crypto like USDT, USDC, they are having characters of money because they are truly backed up with the normal fiat currencies. But when you talk about Bitcoin, Ethereum, BNB, you talk about Solana, you talk about Chainlink, they are tokens which they are likely to be like a digital shares because they have a project behind them, they have equity. So it's more of a shares. But of course, they have some a little bit of variations. But when you talk about an economic perspective, they are more like of a shares. So this is the thing. Look at this. Today you have a company. I have a company X. This company X is having shares. And basically, this company X must have something that they do. Let's say it's a payment solution or data management company. So look at this. When you talk about shares, you are talking about a virtual fractional asset that they represent the equity of the given company. Like when we talk about equity, we're talking about whatever money that's circulating in the given company minus the debit. So whatever that remains and the clean money is the one that gives the value to the shares. So anybody, when you want to be part of the given company, you have to buy the shares. You want to be beneficiary of the company, you have to buy the shares. So it's the same thing. This data management company X, I could have just built it on blockchain. And instead of having shares, I can have crypto assets as the backing of the ecosystem, I mean, of the financial ecosystem of the company. Because the value of the shares, the value of the coins, they are calculated the same. It's all about the equity divided by the circulating number of shares or coins that you get the value of the coin. So basically, most of the crypto, we can term them as an asset. But this is the question now. If we are terming crypto as an asset, then we have to agree, like crypto asset is the fusion of technology and economics. Are we together, ladies and gentlemen? Crypto is the fusion of economics and technology. Look at this. When we talk about technology, we are talking about the infrastructure, the architecture of the company's ecosystem. Like we are talking about how the computer language has been crafted to operate this idea that this guy brought to be running on blockchain. So we'll be cross-checking on how the protocol is, if there is mistakes, loopholes in the smart contract. That's the tech side. But remember, when you want to talk about business, that's where now the economics says. The economics part is where now we are going to analyze how sustainable this business is going to be. Because sometimes it may happen a crypto project is having a very good architectural makeup, but it does not have anything behind it. We see so many coins like Shiba, Doge, they have a good structure makeup in terms of blockchain, but they don't have anything behind it. So when you are investing with a blind faith, hoping like people will buy this coin more, but you don't have anything behind it, which is going to drive the organic demand, which is going to cultivate the growth of the usability of the project, and hence make the coin of it to grow bigger in value because of the organic demand that the project is having on the community. Am I talking to someone, ladies and gentlemen? That's now we need to understand the difference. So basically, when you are going to buy the crypto, you need to analyze it business-wise. That's the economic side, and you need to analyze or to cross-check it in the tech side, looking at the smart contract operation, if it is resembling the white paper that you presented as the business blueprint or roadmap. Are we together until there is? If we are together, please go to your box and type number 111 first. Type number 111 if we are together until there. Type 111. Go to your box chat and type 111. I want to see. Okay, I see you there. That's nice. Now, because we have agreed most of the crypto, they are assets, and when you want to evaluate to get a good estimation, good leverage of your decision, you have to term crypto as a fusion of tech and economics. Of course, in the side of tech, it's all about checking the smart contract. In terms of economics, you have to check how the company can have that credibility of growing sustainably by using whatever that it has, because at the end of the day, the company has to run on its own. Now, this is the point now we need to be very considerate. Like, because we understand the way shares are working is closely resembling on how the the crypto assets are working. I would like to ask you the question. Let's say today you have been given 3 companies, or let's say 10 companies. These companies, they have different potentials, and you have the money to invest in a single company. I would like to ask you, what kind of criteria are you going to use to rule out several companies and choose one out of whatever that you have been provided on the table? Can anyone tell me, how are you going to make a choice of a single company to invest in their shares apart from the list that you have been presented with on the table? Can someone share with me, if it was you given the list and you need to choose the company to invest with? Okay, I see there is a message here. Let me check. Joseph said, the one that will convince me with the security of my capital. Okay, thank you. But still, I have a question to you, Joseph. When you talk about the security of your capital, what exactly do you refer to? Because that's the issue. Like, it's like saying, I will consider the company that is promising me that will not scam me. How would you know this company is not a scam? From the word of mouth? How exactly will you tell, like, okay, this company is good, or this company is having a security? And when you talk about the security of your capital, what do you mean? We need those clear factors that they're going to help you, like, okay, I'm going to check 1, 2, 3, 4, 5. Because at the end of the day, it's you now making a decision. Now you need to know what exactly, because remember, there's a class that I did last time. If those people who speak Swahili, I made a class and I said, anytime when you go and listen to a certain business, there are things that you need to hear. You need to hear them being clicked so that at least it can be making sense. So basically, when you are going to having those factors, you need to have the understanding, like, these factors, if I see them clear, it can give me the understanding of the business, like it's good or bad. Okay, so we have a chair said, understanding logic of the company. Thank you. The one that meets the pillars, 3 pillars. How? The 3 pillars, how? Because at the end of the day, we need to customer management from Eliud Mtalemwa. Okay, nice. And there's a company history. What if it's a new company, Godfrey? For example, like the way I took Inkryptus, what if it's a new company and you have been presented? Does it mean like you're not going to engage with the new companies, new ventures? Okay, so because sometimes, look at this, whatever company that you see today, Tesla, Microsoft, whatever, Binance, it started from zero. Even Bitcoin itself, remember in 2010, it was having around 100 users, only 100 users. It started with the beginners. So if you are checking for the history of performance, what if it's a new company? Like, it's something that you need to pinpoint the potential that's having in, but it's new. Nobody knows about it. How would you pinpoint like this company is good? Because we all know if you succeed to pinpoint the potential in the company which is in infant stage, there is a chance that you're going to make a millions of money. Okay, it's fine. You can make you can make a profit as well in the company which is already running and big, but it's not like comparing to that which was in the infant stage that you saw the potential when many people didn't. I think we all agree in that. So look at this. Of course, thank you for the answers, ladies and gentlemen, that you have contributed here. But let's have a clear chat on this. You see, when you want to analyze a good company, there are several things that are going to give you a general point out that's going to help you to see the potential of the company, even if it's still in infant stage, even if it's old company or is in the middle of the growth. You can tell by using these 4 factors. Number 1, we are talking about community engagement factor. Let me write here. Community engagement factor. Why community engagement factor? Remember, every company, once it is being innovated, we never innovate the company for the aliens. We never innovate the company for nobody. For a company to have a potential, it has to be innovated for people. So we need to know, okay, I'm the first one to see this company, but I need to know what is this company offering to make other people be attracted to use their services as I have been attracted. So the services of the company or the services of the given project ecosystem is the one that's going to attract the engagement between the developers and the consumers. And we need to know exactly what is it, because we know exactly the company's revenue is being grown from the engagement from those people who need the services or product that is being delivered by the company. Yeah, that's where now the revenue is being delivered. So number 1, you have to check what exactly are they delivering. Are we together, ladies and gentlemen? If you agree with me, just go to your boxes and type agreed. You have to know exactly what is this delivering. What was the innovation based on? Because at the end of the day, the engagement between the consumers and the developers is going to be on whatever they're delivering as the service or product. That's number 1. You have to check on that. Okay. So after checking on that, number 2, you have to check on something called economic point of view. Economic point of view. When you talk about economic point of view, there are 2 things that you need to consider over there. Number 1, you have to go and check about the products that they're being provided or manufactured or offered. There are 2 types of products, of course, tangible products, and we have also service products. For tangible products, we have those with the expiry date and all that. So you have to check the production cost, production rate, and the demand as well. So to see if the company is meeting the profitability bar. Because if it's not, then you can see the company is doing sometimes a sale so that the product maybe they can't expire. So at the end of the day, you can find the company is not making good profit. So it's something that you need to be very careful. But we are very advantageous when it comes to companies which are having a service product, because they don't expire, like banks, wallets, and all that. So that is something that we need to have a look on. But number 2, when it comes to economic point of view as an investor, you need to check on the allocation of the shares. You need to know how the shares are being allocated, the inflation, how it's being controlled, how the equity is being grown, to make sure that there is a health growth of the value of the shares of the given company. That is very important to check. So you check the community engagement factor, you analyze the economic point of view. It's very important. Check the product accessibility and demand, and also check on the location of the shares, how they are being arranged to avoid inflation. That's going to maybe kill the value of the company. That's very important things to check. Okay, so that is the point number 2 that you are supposed to use when you are evaluating the company that you can pinpoint the potential, so you can be able to rule out and have the best choice out of whatever that you have been provided on the table. So if that is clear, please go on the box sheet and type number 222 so that we can know that we are together. Type number 22. I need all of you to type because I need to. Okay, that's good. Sorry, just a minute. Okay, sorry, I was having a little bit of interruption. So that's how number 2 you're supposed to check. Number three, we have to be with the futuristic roadmap. This is a very important thing that you need to have. You need to have something called futuristic roadmap. We know the technology is growing and the competitors will be there always. So if the company's roadmap is very good and it's showing the power of competition with whatever that's going to come, and it's showing the way it's going to expand its scope of customers, then that's a good company, because at the end of the day, we need to retain the customers and add more. And we need a wide scope of ecosystem so that you can have a hold and a growth of your community, because the bigger the community, the higher the revenue. So the roadmap has to be very futuristic and realistic, that it shows how we are going to compete with the competitors that are going to arise. Because at the end of the day, if the industry is having the potential, just know that the competitors will always come. So number 3, you have to make sure that the roadmap of the company is making sense. If that's clear, please go to your box chart and type number 333, please. Type number 333. Okay, type number 3. And lastly, okay, I can see you typing, that's good. And lastly, we have to check on something that is called, okay, we have community engagement factor, economic, we have education. Okay, because at the end of the day, for the good company to grow, remember, there is a video that I made, I think, yesterday. We were discussing with my brother Charity. There's something that we said for a good crypto company or any company to grow. Number 1, you need a honest protocol to run the ecosystem of the company. Of course, for the normal company, you need a honest workers so that the ecosystem of the company can be running smooth. But at the same time, you need educated consumers. Look at this. If you don't have educated consumers, you can create a bubble of customers that they can vanish anytime. Think of this. If today, we can see today Tesla is the companies that are having valuable shares. In Tanzania, we have some banks. Think of this. If everybody today is going to sell the shares, what's going to happen? But the reason of many companies growing and having the sustainability of the growth of the value of the shares, it's because most of the people who have bought the share, they are not chasing the price. They know that that's a valuable asset to hold on to, and they can keep their money there instead of saving the money to the bank and encountering the risk of inflation. So you need education. You need to deliver a very good education to the customer so that you can get believers, not speculators. Because once you get the good base of customers who are believers, they can uphold the company's performance as much as they can because of their behavior. Because sometimes the hyping behavior of the customers can result to the poor performance of the company. I think we're all aware of this. You can see how Bitcoin has been performing previously and how it is performing now. That's the difference of the customers, because those who the result of the price fluctuation is coming from the consumers, buyers and sellers. So if the buyers and sellers are having an upward behavior of buying and selling based on the pressure of the price fluctuation, do not expect on the stabilization of the price. But now see, people are buying Bitcoin because they know it's a valuable asset and they don't want to sell it. They can use those Bitcoin as a collateral and get some money when they want to. That's why you see Bitcoin performance now is stabilized. Like for the first time, it has hit all-time high several times, and you see the performance is being maintained for several months now. That's not a miracle. It's because of the most of the users now are educated. It's not only users, also The tokenomics, which is on the economics point of view, is good. That's why you see the performance is just like that. So it's not about the miracles, it's about the reality. So if you see these kind of factors here, they are the ones that are going to guide you to evaluate which kind of company that you deserve to invest on your assets. I mean, your money. So let me tell you the secret. The same factors that you see here are the ones that you are going to use it to analyze the crypto company. Because at the end of the day, these factors are going to help you in the economic side. Are we together, ladies and gentlemen? So for that person who was asking me, how am I going to know if the company is a scam or not scam? Use these factors. It's simple as that. That's why you see for us, we just love to teach from the general perspective. Then we narrow down to specific approach, because now by using these factors, we can evaluate Inkryptus project. As simple as that. Am I talking to someone, ladies and gentlemen? Please go to your box and type number 444 if we are together, so that we can finish up our session by analyzing our very own project, which is called Inkryptus, by using the same factors that we have listed here. Just go and type number 444. That's nice. Great. So talking about Inkryptus project, this is a project that's it's a digitalization tool. It's having a wallet. It's built on blockchain, Binance Smart Chain to be specific. It's having a lot of features, and I believe we can just evaluate this project together. For example, number one, we are talking about community engagement factor. I believe out of these people that we're having this call, some of the people are using Inkryptus Wallet. I would like to ask you, whoever is using Inkryptus Wallet, can you tell me what made you to use Inkryptus Wallet? Just go to your box and tell us what made you to use Inkryptus Wallet. I'm waiting here because I know we are having some people. Okay, we have Cheers Mtei. He's using Inkryptus because of taking service. It's a service which is being offered by Inkryptus. Okay. Do we have anybody else? Why are you using Inkryptus? Can you tell us, share with us, please? Why are you using Inkryptus Wallet? Just go and share on the box chat, please. Okay. Okay. Can you? Okay. Only one has shared. Okay. Probably most of us because we're new. Okay. Okay. There's another message here. I used to send and receive crypto to my friend. Okay, transaction, that's great. The return is making sense rather than the scam business. That is all about staking. That's good. Okay, so actually everybody's having a reason to why you are using Inkryptus. And basically, the best services that are going to connect between the users and the developers is the one that makes the company to be alive, because the engagement through the products that have been offered by the company is the one that makes the company to survive, because it creates a mutual benefit between the company, the founders, and the consumers. Are we together, ladies and gentlemen? So people are using Inkryptus because of staking, yield farming, transaction, IBO, gaming. There are so many things basically that they engage people with the developers. And that's the reason why Inkryptus is having customers and people are still adding up. Are we together, ladies and gentlemen? So that's the reason why we are having Inkryptus here. So those services that we are having with Inkryptus are the one that are making people to use it. I see there's someone who has said strong regulatory compliance. No, this is never going to be a good answer for here, because we are talking about the products first. Because basically when we talk about compliance, we know most of the countries now are still making the rules about how the crypto is going to be used to protect the consumers, encourage the developers, protect the country's affairs. It's something that is under construction. So basically, it's the high time for us to use knowledge when we want to decide about our investment. That's why we are trying so much to base on education, because when you talk about policies and regulations, we are still on the construction. Like, there is no country which is having a clear regulations on crypto. At least United States have already signed several of policies, but we are still on the watch. So I can see Vicky said IBO. Yeah. So as I have mentioned, there are so many services that are present in Inkryptus Wallet, and we are still going to have many other services like what we say these staking, yield farming, transactions, IBO, gaming, and much more, which are going to be coming as far as our roadmap is saying. So that is point number one. Point number two, economic point of view. Number one, when you talk about the products of the company, we all know Inkryptus is having a service product. So we are safe on expiry date, no problem on that. But when you talk about tokenomics, oh my, this is a very, very, very good part for you to learn, because this is where now the logic runs on. This is where now you see how the inflation is being controlled. As easy as that. So let's check it out. Inkryptus is having 200 million ink tokens. Are we together? 200 million ink tokens. Listen very carefully here. This is a tokenomics, token economy, how the crypto assets are being distributed. So Inkryptus is having its own token, which is backing the whole ecosystem. It's called Inky. It's a short form of Inkryptus, by the way. There are 200 million ink tokens, which is backing the whole ecosystem. These are the tokens that they will ever exist in the ecosystem of the project. Now look at this. As just like the way the shares companies are being done, like there's allocation, this much is for owners and all that. It's like this. 5% of the cryptos are directed to the company, which is 10 million. This is for operation expenses. Are we together, ladies and gentlemen? So 200 million of ink tokens are being allocated for the company. 500% of 200 million is being allocated to the company for the operation expenses. And 95% of these 200 million tokens, which is 190 million tokens, they are going to be distributed, or they are going to be owned by the public. Now the question is, how is these 190 million tokens going to be to the public? Look at this. For the clients or for the consumers who are interested in the given project to have an access to the ownership of the company by having the ownership of the coins, they need to own these tokens. And how do they own? Number one, just like in shares, there is something called a pre-sale. In the normal shares, it's called an IPO, initial public offering, where people are now given the chance to buy or to pay for the shares after the company maybe has invested in infrastructure. Then they are going to sell their token in a flat price to raise the funds so they can be able to list the shares on the open market or secondary market. That's the same thing happens in the crypto company, which we call it an ICO, initial coin offering, where the company, once it is already established on the infrastructures, once they lack the funds, they can do a fundraising by selling the coin on a pre-sale price before listing it on the public. But this is what happened with Inkryptus. Inkryptus didn't want to do an ICO because they had the money already. So they opened a pool by providing a seeding amount, and it was Inky against USDT. And this pool is created on PancakeSwap. Okay, so this pool is created on PancakeSwap, and it allows anybody to buy and sell ink token on a real-time price. Like, we don't have a pre-sale on a flat price. The price is changing according to the buyers and sellers, because the seeding amount was already provided by the company by taking a certain amount of budget from 10 million, like a 70,000 tokens, if I'm not mistaken. That was the amount that started with, and a certain amount of USDT. So this is to say, anybody who wanted to buy ink token, you had to buy directly from the open market. But the question is, how do I access this 190 million tokens, which we are supposed to go to the public, but from whatever we see here, they are not sold? How do they go to the access of the public? The answer is very simple. Inkryptus adopted a system called staking. Staking is a system which is allowing people to buy their coins and put them in a fixed account and benefit from either new coins of supply or transaction fees. And it's not a new thing, basically, because even in the normal companies, people tend to buy the shares, and some of the company allows them during the time of receiving the dividends, instead of asking for cash, they are being allowed to ask for rights. Like, I'm gonna ask to be given more shares worth of the money that I was supposed to be credited with. So here, staking is just like asking for more rights, more ownership. Are we together, ladies and gentlemen? So Inkryptus did this. Whoever bought Ink token and so like, okay, I think I bought this token and I love how this project is and I see it's having a great potential over time. So I'm not going to sell my coins. So Inkryptus said, okay, if you don't want to sell your coins, commit your coins in the project so that we can see if you're really committed to it. So if someone buys the coin and decided to commit the token to the project, you are now subscribed yourself to be part of the beneficiaries of more ownership of the coin from Inkryptus itself. How? Let's say today we have, let's check the names here. Let's say we have somebody like Agnes, maybe we have Charity, we have Chaz, and all these people have decided to buy, let's say, 10,000 tokens, 10,000 tokens, 10,000 tokens, 10,000 tokens. You see? So if all these tokens makes about 40,000 tokens, probably, let's say an example, these are number of people that have staked. I mean, number of coins that have been staked by these members that we have mentioned. So the company did this. On the tokenomics, to control the inflation of the token to come in the market, they created a protocol like 1% of the tokens which have been locked in a fixed account in the name of staking will be released per day. That was the first phase, which means if the tokens which have been staked are 40,000, 1% of it is going to be 400 ink tokens. Where do these 400 ink tokens come from? They are coming from 190 million. So this 400 is 1% of what has been staked, but it's going to be deducted from 190 million tokens. And then these 400 tokens is going to be paid as a reward, part of them, but the remaining part is going to be added to the Inky against USDT to increase the circulating amount of tokens, because at the end of the day, once you have been paid these tokens, some people, they don't want to sell them, because only when the person sells the token is going to be available in the market. But some, they say, no, I want to accumulate them. That's why they divide. A certain amount is being paid to you and a certain amount is going to be added in the transaction pool. But remember, this 1% is growing. Okay, so if 1% is left to be, at some point, the 1% can be a huge number of tokens. So they said, okay, we'll be releasing 1%, like from the protocol. It's not about a person is clicking. No, the protocol is written. 1% of the token is going to be released per day. But listen to me very carefully. But this 1% is never going to be bigger than 10,000 tokens. Sorry, it's going to be, let me do this, bigger than 10,000 tokens. So which means the maximum number of tokens that can be released in the circulation per day can never exceed 10,000 tokens, which means when the staking has reached 1 million tokens, 1% is 10,000. But if the staking is 2 million, we will not be having the percent again. It's going to be 10,000 tokens released. If the release is going to be, the stake is going to be 3 million tokens, still the release is going to be 10,000 tokens, which means in the first phase, supply was direct proportional to demand. But in this phase, supply is constant. The demand is one that's going to be increasing. This is the strategy to stabilize the price and making sure that all the tokens have come to the public in the circulation, but the price of the coin has been stabilized in price. It's all about economics. This is to say, out of 190 million tokens, even if we say, okay, from day one, 10,000 tokens were being released, it's going to take around 19,000 days for all the tokens to be supplied in the circulation, which roughly, if we do 365, it's going to take around 52 years plus. So roughly, the supply of the token is going to be continuing at least to the year of 2075 or 2080, if I'm not mistaken. But it's going to be 52 years plus. And you know exactly the staking of Ink token started in the year of 2023. So basically, because the supply is constant and the demand is increasing, like people are staking, we don't expect the percentage of whatever that we receive every day to grow or to keep on constant. It has to go down logically because the supply is constant, the demand is increasing. The number who are staking is increasing, but the number of the tokens which are coming in for rewards is constant. So you know what's going to happen. And basically, that's very healthy for the stabilization of the price of the coin. That's the reason why Ink token was listed back in 2023, it was 0.8, and now it is 1.6, 1.5, and still many people have been withdrawing their profit for a very long time. They have made 3 times, 2 times of their money. Why? Because the tokenomics is good. And not only the tokenomics, but also the number of communities that we are having in the business. Somehow we can say we have a good percent of the believers of the project. That's why we see there are like an abrupt sell and buy of the crypto. That's why you see even the performance of the coin itself is very stable, to be honest. For the last 3 years, we can say it's one of the marvelous performance, very stable. Are we together, ladies and gentlemen? If we understand each other, please go to your box and say understood, so that we can go to the last part where we can estimate the returns of our investment. Go to your box and say if you have understood, please. Okay. 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 Sorry. Okay, let me check. Understood is good. Okay, fine. So the last part that we are going to cross-check on, so guys, I need you, all of you to write if you have understood, because I need all of you to share with me if it's clear, so that we can go to the last part. I see only 2 people have wrote they have understood, so I don't know about others. So you can just share with me if you have understood, so that we can go and finish on the last part. Okay, let me share this screen here. So are you able to see the screen over there, please? I have shared the screen of Inkryptus website so that we can go on the last part of estimating our earnings when we stake with Inkryptus. You can see here, type 11 if you see the screen, please. Type 111. Okay, good. Okay, thank you. So actually on the solutions here, you can see there is a staking here. And it's very easy to use this calculator because it shows, like with Inkryptus, we have around 5 contracts. Of course, we have some other products as well. You have BuySwap, Pancake, USDT, and we have like all of these products. But for Ink token, we have like 5 contracts. You have 36 month, you have 24 month, you have 12 month, you have 6 month, you have unlocked one. The difference between unlocked and other contracts is that when you lock your asset in this month, you will not be able to withdraw your funds, but you'll be able to withdraw your profits. But for unlocked contract, you are free to withdraw your funds as well, like your capital. So look at this. This is a simulator calculator that you can use and cross-check whatever you can earn. For example, for the 3 years, 3 years contract, you are getting paid 0.31%. So for example, let's say you want to buy, let's say 1,500 tokens. Let's say 1,000 tokens. So the price of Ink today is 1.65 USDT. per token. So what means if you have 1,000 tokens, that means you have invested 1,654 for today's price. You are going to be receiving 3 tokens, 0.1, which is the gross, and you, after being charged, you'll be staying with 2.32, and 0.7 will be charged from 3.1. That's going to be happening daily. That's close to $3 every day. And if you want to cross-check maybe per month, you can just choose here, and you can see per month you'll be making like 115. If you want to check per 6 months, this is what you're going to earn. Like the estimation is here. And the good thing, it shows how much you can stake, how much you'll earn, and how much in total, and value as well according to the given times value. So for example, today the value is 1.65. That's what you are seeing. Okay, that's how it is working, ladies and gentlemen. And if you want to go for 2 years, the same thing. This is what you invest in value, daily profit, the asset and the value, the profit of yours and net, profit and value, and the profit fee, profit and value is just like that. That's how it's supposed to be seen. And you can cross-check for 2 years, 3 years. You can just play around with this calculator as much as you want. And one thing that I want to remind you guys, that when you are investing with crypto, you are not investing $10,000 or whatever amount of money. You are investing an asset worth of that money that you bought with respect to the price that you bought with at a given time. Are we together, ladies and gentlemen? And one of the things that I would like to remind you, the challenge of our business is price fluctuation, okay? Because some of the people, they may say, oh, let me stake the flexible contract, and then after 2 weeks, I need my money back. Okay, fine, you can have your money back. But what about the price of the coin? Are you sure after 1 week, the price is going to be the same price that you bought with, or is going to be above the price that you bought with? It can be below that, the price that you bought with. So that's why I always recommend people, when you want to invest with crypto, it's a very good approach if you think about long-term perspective, because that's going to be easier for you to make a good result, because you let the business flow by itself. But when you start thinking about, I wish this coin should be at this price, oh man, you're going to lose a lot of money. You're going to be disappointed, because at some point you may need your money today, and then the price is not friendly, it's below the price that you bought with. That's why I always also recommend, like, okay, do not invest your emergency funds here. Like your money, you need them maybe next month, and you are coming to invest here, so the next month you can take it back. And no, don't do that. Invest the money that's supposed to be invested. I think we all know what, when we talk about investment funds, we know exactly what do I mean. Are we together, ladies and gentlemen? So please, I would like to end up here. If there is anybody who's having a question about the other things about education, you can see how we are doing on the factors that you need to analyze on the business. The roadmap of the Inkryptus, I think you can just come here on the resources, you click on the white paper, you'll see a lot of plans and whatever that the company is going to deliver with time, ink pool, NFT box, so ink bridge, launch pool. There are so many things that are going to be delivered, which we know exactly they're going to have a demand with the community. So, and lastly, about the education, as I said, Inkryptus does not provide the weights, just weights. No. We deliver education. So, yeah, that was the end of our presentation. If we have anybody who has not understood anywhere, or you have a question, please just go to your box chat and ask the question. And if the lesson was clear, I have tried a lot today to go very slowly, so at least you guys can get the concept. So if it is clear, just go to your box chat and type anything to indicate that the lesson was understood. But if you have a question, I'm going to give out 5 minutes for you to ask me the question, so that we can try to make some clarification.